Yes, here on the C Morning Show, we do like to talk about money.
Yeah.
Yeah. And one of the things that we would like to discuss or zero in on today is emergency funds. So what is exactly emergency funds and how do we set aside emergency funds for our lives? And that's why today we have the expert, right, Tom?
Of course. And if we see the data here, according to 2023 survey from Statista, only 38.3% have emergency fund.
Uh-oh.
Meanwhile, according to licensed capital market competency assessor Gembong Suwito, easy payment system, including the buy now, pay later method, and discount ads on social media have affected people to feel less concerned about having emergency funds, especially if they don't have any ability to manage cash flow.
Yeah, so let's change the situation, right? Because it's just not good. I actually don't like using pay later stuff because it's like...
It's a trap.
It is a trap. You feel like you have extra money, but actually, no, you don't.
Yeah.
So avoid that. But anyway, we're gonna focus on emergency funds here, and that's why today we have financial planner Metta Anggriani. Good morning, Mbak Metta.
Good morning, Marisa. Good morning, Mas
Good
Tommy.
morning.
Thank you so much for being here. So what is emergency fund?
Well, yeah, emergency fund is like a cash reserve that you specifically set aside for some unplanned expenses or financial emergencies. When you talk about emergencies, normally it's something that arises from the life common risks, right?
Yes.
Like illness, death, disasters, accidents, or loss of income because we got layoffs or bankruptcy, right?
Yes.
Right. So I mean, those bad things we don't expect to happen, but actually there's a probability or a likelihood for those things to happen. So we have to be able to assess on how much risk that may be impacted to us, right? So that's why emergency fund is actually a good starting point for you to start having a savings, because then you don't consume all your salaries, but you set aside some money, just a little amount for something that is unexpected. Life, there's always something in it.
Oh yeah. Oh yeah, there's no certainty in life, that's for sure. So if our income is a pie, how many percent or how big or how small the slice that we have to set aside for emergency fund?
Well, maybe we should talk about the target of the numbers of the emergency fund itself, right? In general, it's safe to say that you have to have 6 months of monthly expenses for the emergency fund. So it means that if you have 100% salaries, if you consume all those per month, so it means you have 6 months salary that you don't consume. So, but of course you don't have it at one time, right? So that's why we have to slowly accumulating the emergency fund. How much per month is? At whatever amount you are comfortable with, but at least if you can start from 5 to 10% from your income,
from the income,
to start emergency fund, that would be okay. Because once you start the account, then you're accumulating, and you have to maintain the balance as well, right?
Yes.
So then you think of where to put that emergency fund. Maybe you can put it in savings because, well, of course, you don't expect to use that emergency fund because you don't expect bad things to happen.
Yes.
But you want that fund to grow as well, not just being idle, right?
All right.
So once you know how much you have to save, or how much you have to allocate every month, and then you have to put it in the right instruments so that your emergency fund will be always available to you whenever you need it.
What would be the right instrument then? A deposit?
Well, yeah.
So it has more interest, right? I mean, instead of just a sleeping money,
right?
Like a dormant
The thing is, because if it is emergency fund, you have to be able to access it at any time because you don't know when the risks are happening, right?
All right.
Okay.
So you have to ensure that whenever you need it, the balance is available. So that's why it's better for you to put in a conservative instruments
Not that
where actually there is a less risk, but of course there's less returns as well.
So if I'm not mistaken, so a part of your operational, like activities and you have savings. So ideally we have extra for emergency fund, right? Not cutting out from the savings.
Well, ideally,
basically savings is from long term, right?
Yeah. Well, basically, emergency fund is part of savings. So that's why if you talk about savings, you can allocate some savings. The short term, mid term, and also the long term. But then again, you can diversify the instruments to put on your savings. So again, this emergency fund is a way to start your savings. Start from the emergency fund before, then you can start with another goals for the savings.
So, so far, is it true that young professionals or young generations are less concerned about this?
Or
according
less
to
able, maybe because
Yeah.
of lifestyle, no?
Yeah.
Well, yeah. Nowadays, the young people, first, they're more focused on the lifestyle, or the second, nowadays people they tend to start investing first before having this emergency fund.
Is that it, Ma?
Yes, because people are more attracted to have higher returns
course.
than actually managing the risk management.
Wow.
Right?
Yeah.
So that's why they tend to have an investment, but they don't have anything. So whenever there things happens,
Yes.
they use that investment again. So that's why actually the investment will not be growing as expected.
Right.
Because then you don't have the cushion to manage your risk whenever happens.
That's correct.
So just, okay, the priority is actually to have or to keep and to manage that emergency fund, then you can invest.
Right, because agree. Because it's important to before we start investing, our finance should be steady. Means that our basic needs are fulfilled, as well as we have the habits to have monthly savings. Because this savings is actually whenever a financial shock happens.
Yes.
Whenever small it is, it could be a setback for us, right?
Yes, correct.
So if you don't have anything, it's easier for us to get into debt. And once you get into debt, it will have a lasting impact.
Okay.
Would you categorize insurance as part of emergency fund? Having an insurance?
Well, actually, it's quite different, but the goal is the same because it's to
Yes.
protect
Correct.
our finances.
Yeah.
But the thing is, the emergency fund is for for your some risk that the likelihood might be high,
Yes.
but the impact is small. But for insurance, maybe the likelihood is not so high, but the impact will be big. So it could be complementing because like insurance, normally we have insurance for health,
Yes.
for life insurance.
yeah.
But the emergency fund is for something that is something that we are not expected. For car repairs, maybe home repairs. That is you don't expect things to happen.
Yes.
Suddenly there's flooding or those kind of things.
Yeah, like the worst one, like pandemic,
Yes. That's
layoffs.
True. That's true.
Exactly.
How early should we save for emergency funds? How young should we be? I mean, does it have to be married couples and then they start thinking about having emergency funds, or single people are also advised to have emergency funds early on?
Well, it's advisable to have emergency fund as early as possible. As soon as you have your own salaries, maybe you should set aside a saving for emergency fund, because when we as we get older, we have more needs, right? From
More
single, from single to married, and then you have children.
Children.
The number is
yeah.
growing. So I mean, like if already set aside some amount in the beginning, then you can just top it up, during the times, right?
All right, so any tips, especially for youngsters, to begin this, to begin, to start to aware, to collect emergency funds?
Especially
Yeah.
facing the temptation of lifestyle, right?
Yeah.
I mean, they're so active on social media. They see all this lavish lifestyle, and of course, it's something aspirational, and there's nothing wrong with that. So how do we fight the temptation so that we can always regularly set aside that
Yeah.
5 to 10%,
5 to 10%.
right?
Yeah.
Yes, because the young people, their risk exposure is very small, right? They don't think about getting sick or those accidents, those things.
Yeah.
But the thing is, with this pandemic, it really an open eye, right, for us that things could be happening at any time, at anywhere, at anybody, right? So I guess, and right now, I think the temptation, like you said, we set aside this emergency fund for these unplanned expenses. The unplanned means something that actually bad things happen. But sometimes they think the unplanned is that, well, suddenly there's announcement of the concert, right? Oh, so that's another unplanned expenses.
Holidays.
Yeah, holidays.
Travel overseas.
Travels overseas. Or maybe just, this later in the month, when you don't have any salary, well, I guess this is emergency. We can use that emergency fund.
right.
So I guess the terms of emergency itself should be,
Narrowed.
we narrow that, something that is uncontrollable that you have to manage, right?
Yes, yes.
And then I think once you have an emergency fund, you have to set a separate account, right?
Separate account, separate bank.
account, separate whatever.
Whatever.
But don't mix it up with your operational account.
Yeah. Don't mix it up with your operational. It has to be set aside, okay? And
Right.
what else, Matt?
And then, well, you can put, an auto debit, right? So you have automatically transfer from your salary account to your savings account. So
Yes.
at least then you have a regular top up of your emergency fund.
Okay. Auto debit is a good system, yeah.
Yeah, but is it wise for us to use emergency fund to invest?
No.
Okay, good. No, because some people, when they have collected this amount of money,
Right.
and then, someone got offered to invest into some business, for example.
Or trading.
Yes, they have higher return.
Yeah.
So this is not for that.
This is not for that.
Okay.
Because again, you have to manage that the emergency fund should be available at any time. While investing, you don't really have assurance or that they will be growing or the amount will be there at any
But some
time.
business, they offer like monthly return and higher return as well.
That's something that we have to be very cautious as well. I mean, like
Okay.
when we are offered those kind of investment with the, how much return, we have to really compare whether the return itself is actually
Complementing your
yes,
monthly.
and is it normal? I mean, like when you compare to those returns from the banks, or even if you compare with the stocks market,
Okay.
is the return is reasonable enough for you to,
Yeah.
to put your money on it? Right?
Yeah. Unless
Because
with-
again,
yes.
investment, whenever you have a high return, that means it's higher risk as well.
That's true. But actually, I totally get your point about Metta when you said, okay, this fund has to be available anytime we need it, right? But what do you think of the digital banks who offer deposits that can be, what do you call that, dicairkan, or can be,
Cancel.
yeah, exactly, anytime, actually.
Well, yeah, I mean, that would be one of the options as well.
Because they do offer higher interest.
Right, right. And the thing is, with this emergency fund, we put it in the savings account or something, or some instrument. But the thing is, we have to have a limited access to it.
Okay.
Because otherwise, you will withdraw it at any time as well, right? So like, for example, if you put it in the time deposits,
Right.
maybe you cannot settle it at any time because
Yeah.
there will be some penalty.
Sure.
But
Yes,
then
correct.
those restrictions will make you think twice whether it is necessary to settle, to withdraw the amount. Is it really that emergency for you
Right.
to
So
withdraw
actually,
the
it's
amount?
quite useful to have
Yes.
the old system of having time deposit because
Right.
you can't just break into it, like withdraw it
Right.
there and then.
All
That's
right.
a good one. Thank
So-
you so
Yeah.
much. Yes?
One more.
Yeah, go.
How often do we have to add more to our
yeah.
emergency fund?
Oh yeah, that's true. I mean, like, well, of course, if you use the emergency funds, you have to top it up. But yeah, slowly you can top it up. But then again, as we get older, we have more needs, we have more dependence, we have more burdens. So maybe we need more emergency fund. So it is suggested that we do regularly a financial checkup. So we assess our finances as well, our situation. Now, well, this year I have more kids, then I need more emergency funds. So that's why when we assess our situation, we know when to, top up our emergency funds.
Yeah.
So then again, and of course, when you're doing the assessment, it's not just about the amount, but you can also think of maybe I can put in some, instrument as well, not just time deposit, maybe some in the amount for the
Fixed rate or
Yes.
government bonds,
Yes.
all that, or even probably in stocks or, I don't know, probably in trading if you're
Reksadana.
well, yeah, I mean, like money market mutual fund would be one option as well.
Yes,
And
yes.
some people would like to do it in gold.
Yes, gold. That's pretty stable, actually pretty good.
Conventional but stable.
Oh,
Yes.
yeah.
Although some people said it's not good for emergency fund because there will be, the price differences between the buying price and then the selling
The
price,
selling
right?
price.
Yeah.
But again, once you have a stock,
Yeah.
the gold,
Yeah.
you won't need to sell it, right? You don't want to sell it until something bad really happens.
Yeah,
Yes.
yeah, that's correct. And
just-
one more thing, but how regular should we do financial assessment? Twice a year or 4 times a year?
Or yearly basis.
At least once a year.
At least once a year. Okay, financial
Yeah.
assessment. Alrighty.
Or anything happened to your situation.
Yeah. Oh, any change?
Any
we
change.
just always assess our finances.
yes.
Okay.
Thank you so much,
Thank you
Metta.
so much,
Thank
Mas
you.
Ami, Mas Marisa.
Thank you.
Always insightful. Isn't it? I love it. I love talking
Please
about money.
learn, guys, learn. All right. Now we're set for a commercial break. When we return, we'll bring you the world headlines.